are live on YouTube. Let me turn on the live on TikTok. Perf. Okay, so today we're not going to back test too much. We might a little bit at the end, but I just want to talk to you guys about weekly profiles and higher time frame POIs, basically, in SMT. Adding an SMT to the strategy has been a game changer. Honestly, trading on the 15-minute chart has been a game changer. It's honestly the best thing ever, in my opinion. I will literally trade on the 15-minute chart, like not even go down to a lower time frame. It's that good. But I just wanted to show y'all three steps that will make you like ultimately profitable so much faster. So step number 1. Zoom out so you see the previous day and current day. Number 1. Number 2, stay on a higher time frame until you want to enter. Don't sit on the 1 minute time frame. Don't bounce back between the two. Sit on the 1 hour, 15 minute, and I'm going to show y'all why you really can just sit on the 15 minute and trade on the 15 minute. But you can start on the 1 hour. This is really all you need. And then obviously everything we've talked about, SMT, etc., etc. Sessions for your liquidity if you want it. So let's look at it. As you see here, this is Friday, Thursday and Friday. Obviously, I did not need this to trade, but I would have been way more confident in my trade if I zoomed out. I mean, I did zoom out once I saw ES running up and NQ was going lower. And I was like, where the fuck is ES going to? A fair value gap. Boom, great. But if you zoom out, that is your SMT. ES came into this fair value gap beautifully. That's a terrible. We came into this gap, and in Q, we did not at all. Not even close. That was your reversal. Boom. Beautiful. Now, if you sat, and you can just sit on the 15 minute for that, get in a trade. I'm trading ES again because it's just less risk. I'm not trading NQ. So for NQ, you would just get in there, or you get in on this fair value gap tab here. ES, my trade was as soon as we got a candle close out of the gap. That was my trade. I was safe and took it to this low instead of the London low, because that was my 1 to 2. Boom. You could take it to the London low if you wanted it. That's the trade. Okay, great. Now, you could sit on the hour chart. Honestly, y'all remember I was a 4-hour chart girl. You don't really need it anymore now that I'm looking at it. It's great. It's great. But as you see here, I know all the fair value gaps, they look crazy. This was the gap we were into. This was your higher time frame POI for NQ. So you could have done this without even looking at both, without even looking at SMT. That's the good part about it. That's the good part about ICT. I know people don't like to think ICT works, but it fucking does. Look at it, beautiful. Without even looking at both of these at the same time. If you just looked at ES and you just looked at NQ, you got your reversal from a fair value gap. Beautiful. Beautiful, and it's always a liquidity sweep. So for NQ, it was this liquidity sweep, and then for ES, it was this one before, or it still is technically this one. We came way up higher than the gap. That's still SMT, because NQ were in the gap. ES were out of it. This same gap is this same gap. If y'all need me to draw that. And this is how you use weekly profiles. That's why when people get into ICT, they overcomplicate it. They look at weekly profiles, daily profiles, all these things. Like in the sense of trying to remember, like if we have a Thursday expansion, we have a Friday consolidation, if we have a Wednesday, I don't even give a flying fuck. But you want to look at the day before, do you have a fair value gap? Do you have a breaker block? Do you have anything we can tap into for me to reverse from? Just keep it simple. All you need is fair value gaps and liquidity. And to keep it extra simple, and this is literally how I trade, you want the market to come to a fair value gap and then react off of it to a liquidity point. That's it. That's really what you want. So even if we got a candle close, we did get a candle close above this gap, which is, but we had another one, thankfully, on the 15-minute chart. But usually, if you get a disrespected fair value gap, you would take it to the next point of liquidity. That would be your buys for the top side. Usually, you need to follow that on a lower time frame when it comes to inverse fair value gaps, because a lot of higher time frame gaps will get fully closed above and still get respected. That's just how the higher time frame works. Obviously, on this one, it did not. It closed in and respected it. So that's why if you watch both, you would have seen that, because maybe you took a buy off of this inverse fair value gap. I mean, it did take out this liquidity, so that could have been a trade for you, honestly. That's not a not valid trade, I don't think. If you got in a buy here and just took it to this liquidity point here, we did sweep it, and that could have been your short little scalp. But if you're watching both, you wouldn't have took that trade and you'd have been ready for the sell trade. And or this is still bearish for value gap, you could have waited for the reversal off of that. So rest of what we're gonna look at today, like just look at zooming out of the charts and looking at just the previous day before and how it reacted off of it. I am gonna turn off my sessions indicator. It does help for SMT. My fair value gap indicator is a lot because we ran up the day before, but on the day before, we had a liquidity point already way far away that we had to mark, but either way, we swept both the Asian and London highs. That was your liquidity sweep. For ES, it was here. For NQ, it was the London one, as you see, and then they both reversed and then ran down beautifully. And it was SMT with the candles. The 10 a.m. or 11 a.m. candle. Are there different days? Oh, wrong day. Here we go. SMT with the candles, you have to go on the lower time frame to see it. On the 1 hour, they look the same. Either way, liquidity sweep, reversal. Even if you don't even trade SMT, you still got liquidity sweep, reversal. This was off the New York high. But this was the liquidity point I had targeted. This one way back here. That was a little higher. Because then as soon as we closed underneath that yellow line, there was a further one on NQ. The one on NQ was a lot higher because people took this trade up on NQ. It was like way up here. But just zoom out for that. But then you got your SMT on the downside. We swept here, London and PM, and then we did not on NQ, and then it ran up the rest of the day. But NQ people took that good trade just to this low. That was all you needed, the 930 low, and then obviously ES, we took it down a little further. Every day, this is just what happens. You just zoom out. I'm zoomed in too far, so look at the day before. Make sure I'm on the same day. Monday, Tuesday. So this day we got, on Tuesday, what did we get? We got a reversal. Yeah, we got a, no, what the, 8, 9, 10. Okay, yes, we got a little sweep of London. I think actually I took the trade down. Yes, Tuesday we got the London manipulation, and then we did like a New York continuation a little bit. And at 9 o'clock we did, this was SMT. We swept this candle here, but we did not on ES. If you can see that, we made a lower low, and then we made a higher low on NQ at 9:30. 10 o'clock we took it down to the Asian lows, and this was prime SMT. This was some people's big trade of the day. I took actually both of these. It was so clean. We took the London low, but we did not on ES. London low was way higher, and then that was the big reversal of the day. It took out the trade for 9:30. Came up, boom. That was a trade. Monday was a shitty price action, but if you watched both, because I did not, I wanted buys up to Asian. ES gave it to me. I was only watching NQ on Monday. I started SMT on Tuesday. We still tapped into an hourly fair value gap on NQ to reverse. We closed above it, swept the highs. Our liquidity on ES to reverse. That was the trade of the day. I know a lot of people didn't take a trade on Monday because I get it. The price action wasn't the cleanest, but this is still a nice move. We're on the hour chart. This is a nice move. Liquidity to liquidity. You don't have to run it to the session highs. I usually, like I said, I'll take liquidity to liquidity on NQ. It went lower and took out both of these liquidity points on ES. It just took out one. Great trade. Honestly, yeah, you had to wait for it. If you didn't take a trade that day, that's also fine. However, this was a beautiful trade, but with watching both. But even if you just looked at one or the other, hourly PD array, hourly 1 hour gap to reverse from. That's what you want at between 9:30 and 11 o'clock. You want a higher time frame PD array to get respected, bounce off. We still do the same thing. Yeah, we closed above it, but we swept liquidity. If you close above it, there's usually either another gap or liquidity point. Boom, we took it, and then we reverse. And then you'll know, because that's your SMT. We did not take out this Asian high. That's why it's good to watch both. And then it's really the cheat code. It's really the fucking cheat code. And ICT really is going for this because I swear to you, I hated SMT, y'all. I really did. I was like, I'm not watching this. It's lagging. And it really doesn't lag like that. Does ES and NQ have more volume during New York session? Yes, both of them have more volume than in New York session. New York session is the biggest session of the day. Sometimes it's not. On Monday, it was London. London went stupid, and then we got nothing in New York. But it depends. But usually, yes, New York is always the biggest session. That's why I trade at 10 o'clock. The 10 o'clock 4 hour candle is always the biggest candle of the day most of the time. And NQ is more volatile than ES if you need that. All right, next day before. What is this? This is our Monday that we just talked about. This is Friday, so let's do Friday, Thursday. Friday, Thursday. What do we get? We swept London and ran down. This looks like all we got. Oh yeah, that's what we got. We were already running down because we ran up the day before a lot. We were already coming down. We did not come into this gap. Sadly, you didn't get your higher time frame POI, but you did get these equal highs swept in NQ. The highs were not swept. The SMT on this one was tricky. The SMT on this one was the 9 candle and the 8 candle and the 9 candle. So at 8 o'clock, we swept London. We swept the London at 8 o'clock, and then we went lower. So that's why I said sometimes SMT is candles. It's the 8 to 9 candle, but then on NQ, the 9 o'clock candle swept the 8 o'clock candle. For you CRT traders out there, that was your SMT. It was quick, but obviously you didn't even give a fuck. I got in at 10 o'clock and I took it down. I didn't even care about this big ass 9 AM candle. I got in, we were already low. We went down to a 4 hour fair value gap if you wanted to know how far we were going. I think I took it safe. I got in, I took it to this liquidity point, and then once we inversed on NQ, once we closed below this fair value gap, the inverse fair value gap, I took the sell down again, and then boom, I took 2 trades that day because I'd rather be safe than sorry. So just in case we reversed from this point, I took my profit on the first trade. So this opened to there, and then once we closed below this gap here, we ran down and we came back up. Obviously this is a whole hour, that's why it looks like a blue candle. It ran down and then it reversed back up beautifully. So this day, the daily profile didn't really help you, but you did get SMT. So obviously look at one or the other. There wasn't any gaps to inverse here, but there was a bunch, honestly. If I'd looked at ES, I'd have been way more confident in holding in the trade because we inversed 3 gaps on the hour chart. Next day was, the day before was FOMC, but again, took this trade on. I actually took this trade live. I sold early though, getting mad at myself. If y'all remember, but we were in a fair value gap on both. Bearish fair value gap, 9 o'clock, 10 o'clock, we took the trade down. This was the London low, and that's why I sold early, because it's a session low. And then this was PM session low, and then I just took it at these two, because NQ did not sweep, neither did ES. They didn't sweep it fully before FOMC. So I did mark all these profit targets. So I have 1, 2, and 3, and I probably would have took it at the middle one, because that's just how I trade. If there's 3 profit targets, I usually take the second one, not the last one. Higher time frame POI on the 1 hour chart. That's all you need. So that's why I got my fake outs down and got funded. Like you sit on the 1 hour chart like this. And even 9 o'clock, 10 o'clock, you could have traded off this chart by itself. You didn't have to go to the 3 minute. You didn't have to go to the 1 minute. Sometimes the price action is so clean. 10 o'clock, stop loss below the high before at 9. Take profit at one of these liquidity points. Here, one of these two. 1 to 2.6, 1 to 3. On the 1 hour chart. You traded that entry on the 1 hour chart. Like, you don't, obviously there's days where you do need it. Like, say you didn't get in at 10 o'clock, delete. Say you don't get in at 10 o'clock and then it starts to run down like this. Yes, you have to go on the lower time frame because it's going to close at your profit. But you could have got in right at the open of 10 o'clock. And you probably, if you went on a lower time frame, this wick, because the PO, if you know the PO3 of ICT, you know, this is probably a fair value gap on the lower time frame. Like, this probably ran up, tapped into like a 5 minute fair value gap or 1 minute fair value gap. Then you got your cells there to go lower. But for me, I don't need that all the time. I usually get in right at 10 o'clock because I'm a tad impatient. But yeah, if you just zoom out to the previous day every time, it's like a story. You know what I'm saying? Like, this was the day before. And then boom, we, ran down. And then the day before that was Tuesday, Monday. Okay, so ES on Monday was super ass. And this is why in Q, people like trading. Look how bigger that move is versus this little move. So ES, you wouldn't have had a move that day. However, on NQ, you got a good move. But this was 4 a.m. Actually, this was a shitty price action. I remember this day. We thought we were going to go up, and it kind of like went into this hour for value gap, and then went lower. So if I was looking at NQ, I actually was trading NQ. I lost getting a bias. But it was a nice buy setup, but it just, if you looked at the higher time frame, we were going down a little more. So just a day to either not trade or, like I said, off of this 1 hour, we did hit it, the 1 hour PD array. It did tap into it on NQ. We didn't have one on ES unless it's just super far back. Yeah, we have one here. So I just gotta zoom out. So yeah, that was your trade. Sells out of this fair value gap that I did not look at, but I got on the chart. That's why I said, like, if you zoom out, you can get a trade every day. I get it, you shouldn't trade every day. Like, this is a prime day on Monday where you don't have to trade. But if you did, 9 o'clock came in, you could have just traded this 1 hour candle. That's a nice candle. Liquidity point right there. As soon as 10 o'clock opened, stop loss above the high, which is it's like almost like a turtle soup trade. Then stop loss below that low. It's a 1 to 5. It's literally a 1 to 5. Some people are like, I don't trade Mondays, I don't trade Wednesdays. I totally get it, though. Like, you can see price action and be like, actually, no. But for me, I like to balance like higher time frame trades with trading like a scalper kind of. So I like to get an overall bias of where it's going at 10 o'clock. But then for me, I just take it to liquidity. So I honestly probably would have sold at the bottom of this hour candle. You see what I'm saying? Like, get in up here, sell this candle. I don't need to run it to Asian lows every day. Obviously, there's days you can tell we're going to run to Asian lows and highs, but some days you just take it liquidity to liquidity. Same with here, the reversal back up. If you got the reversal back up, which I think some people played in the afternoon, take it to liquidity and be done on days that are sideways. I personally, as beginners, I think consolidation days are the best because we know how to trade liquidity sweep reversal, So that's just what you get. And they might not be big moves, but you'll know how to see them on a lower time frame, in my opinion. Again, to each their own. Days where we just run up like this and run down and you have to like get in the middle somewhere are usually not the best in the beginning. I learned how to trade those, but this is also SMT, I think. Yeah, we went lower. This is also 5 a.m. This is the London session, so we didn't get that, but that was a nice SMT to go lower. Okay, let's zoom out to the 2 days before this. Yeah, this price action was not the best. So here's what we got was Thursday, Monday, Friday. Was this like a holiday or something? Thursday, Friday, Thursday. Okay. This day we just got a regular power of 3. We traded sideways, we swept the sell side, and we ran up. It wasn't great price action either. I don't even think I took a trade this day, even though it is SMT because on E and Q, because back then I was just watching NQ. In Q, we took out those lows. ES, we did not. So SMT for buys. Boom. See what I'm saying? It's so good. Now, the last part of trading that's the hardest part is your emotions. That is the hardest part. So trust yourself, and you don't have to lose money and to realize. But with the analysis, I can have like a 9. I mean, I do have a 98% win rate when I'm trading. It's just when I lose, I start to spiral. Even though I lose like once. But again, that's just another day, another hurdle. Okay, this is Thursday, Friday. Thursday, Wednesday. Wednesday, Thursday. Wednesday we ran up, and then Thursday we just tapped into a fair value gap and ran up. Boom, beautiful. Hourly gap. A lot of people took this 9:30 trade, liquidity sweep down to at 9:30, and then 10 o'clock I get in and took this trade to the upside. I actually missed this trade because I thought we were going to reverse here and go lower, but we were running up. But it is what it is. I should have known, waited for just the hourly gap reversal. There was just an hourly gap back here I drew on NQ. Yeah, it was this gap here haunting me. So you don't even need to zoom out unless you'll know you need to zoom out. This is the day I didn't even need to zoom out. We came into this gap, we wicked out of it, and that was the trade. We ran up, traded a little sideways, and then we ran up the rest of the day. See how your daily profiles and weekly profiles kind of go together? Not in a sense of like, oh, expanding one day, trading sideways one day, but like there's always something the day before that the current day you're in wants to bounce into for some reason. So when people say ICT don't work, they're fucking liars. All right, this is a good I remember this week. This was a shitty week of trading as far as like price action, but for me, like I said, a lot of us are liquidity to liquidity traders. I made bank. I traded all this live. All this is live on my YouTube channel. Liquidity sweep reversal. Liquidity sweep reversal at 10 o'clock. Obviously, the afternoon, like 11 and noon, we got those big trades of the day. Afterwards, I don't even care. These are still good moves. The down trade down, down trade down. I took that one. Down trade down. We took that one, and then obviously reverse back up, and then yeah, we took the same trade every day at 10 o'clock. It was fucking beautiful. This one, it was one trade. This one, someone wanted lower to these lows, but ES, it was SMT. ES took the low, and we did not. So we reversed. But it was still a good, what did I make? Like $500 that day or some shit. I don't know. Also a beautiful day. I got in right at 10 o'clock and took it down on NQ. Didn't even need anything. We did a power of 3. We accumulated, barely manipulated up into this fair value gap beautifully on both ES and NQ. SMT though, because we swept these highs on ES beautifully to the tick. And then obviously that's this high, and we didn't, and we reversed. And I got in right at 10 o'clock, didn't even wait, took it. I think that was my biggest trade on my funded account until I got funded. My funded trade was the biggest, but beautiful day. Continuations, I used to be so scared of them, but on the higher time frame, you can kind of tell. Like if you were watching this maybe on the 1 minute, it probably looks scarier. It'd be like zigzagging its way down, but on the 1 hour, we're clearly going down. Like just take that one candle and move on by your day. And yes, it was a bigger candle actually. Great day. Again, out of a 1 hour fair value gap, a higher time frame POI or SMT, and usually it's both. Came into the previous day something, and then the day before that, same shit. Liquidity sweep sells on NQ, and I took it to I think the low of this candle. There's your little CRT for those CRT traders if you want it, I guess. ES, it went a little further. That's your SMT. ES swept this low. NQ did not, and that's when you know, like, say you're on NQ, I knew to sell my trade. I wasn't watching NQ, but I just know once it starts reversing, I took my money. Or I think there was a liquidity point somewhere down here on the lower time frame, but if you're watching ES, you'd know to sell, because now we reversed back up. And that's almost every reversal is SMT, if not every reversal is SMT. And you can go back and look at your charts, and it does this all the time. Okay, now these days, wow, SMT. This day we traded, we were down here, and then we went up to this gap. That was the trade. And then opposite, we started up here, and then we went down. And you can tell when you get on the chart at 10 o'clock. And that's why I tell people who are like, FEG is a retail trader term. Cool. I didn't hear anyone talking about fair value gaps in 2020 when I traded retail at all, but maybe so. That's the thing about people asking, like, what do you think is gonna happen tomorrow? What do you think is gonna do this? Wait for the. I don't. I get on the chart at 10 o'clock or 9:45, 10. We were already down here, so I knew we were going up to here. 10 o'clock, we were already up here, so I knew we were going down to here. Like, it's not that fucking hard. Now, again, on this day, we do have SMT from the day before. NQ swept that high beautifully. ES did not. And I definitely was on the lower time frame here. This is before I started trading on the 15-minute time frame. I took a buy on the 5-minute chart because we inversed the fair value gap. We inversed this one on the 5-minute. But you have to wait. Make sure you inverse it on a respectable time frame. Then we reverse. I did get back in though. But SMT with previous day. Just zoom out to the previous day. That's all you need. Okay, cool. I don't care. It could be retail term. I don't care who coined it. I just said I learned it from ICT. I didn't hear about it before ICT. That's all I said. I didn't say you're wrong. I said you could be right. I just said that's not how I learned it. No one was talking about fair value gaps in 2020, in my opinion. That's just. But again, it could be retail term. I'm sure it is. But most people consider it an ICT term. But it doesn't matter. Use it. Use it for value gap. Who cares who cares if Isaac Newton started it? Use it. It's the best thing. It's all you need. Okay, the day before that. And obviously we came up into what? Previous day fair value gaps both times. This time we came into the same one twice. Technically. Or this one once, and then the next day we came into the higher one. That's it. Look at a higher time frame POI and trade it, and then look for SMT, and you're gonna get it like every day. Another day we got on at 10 o'clock and just took it down to this low was my target. Because on the 4-hour chart, I was looking at the 4-hour chart back then. This was the only low on the 4-hour chart. It's a chart pattern. But yeah, there it is. So that's what I'm talking about with ICT. You just need liquidity point is your targets or your stop losses. Fair value gaps are usually your entry points or something you base your entry off of, and you just do it every time. Let's see, this day is this SMT? Oh, not quite. Kind of. It's like, I don't know if this swept this high, but we swept it over here. But not a great day to trade. We came into this gap on the 1 hour and went up a little bit. That was the 9:30 move, so it wasn't great. And then, actually, no, I remember this. I was waiting patiently for the sells, and we got them at the end of the day. So I got the chart. I was waiting to get in for sales because we already ran up. That was not a good enough move for me, and then I didn't trade that day. So you'll know some days when not to trade. All right. Here we are again in an hourly fair value gap. A bearish one to go lower. SMT sells. Beautiful. You don't know what that is. ES cleared the gap. NQ cleared the gap. ES, we did not clear the gap. Boom, we ran down. And then another SMT for the reversal back up. It's like every reversal SMT. ES, we took this low. We didn't go up higher, we took the low. NQ, we did not take the low. Not quite, we reversed back up. And that's your reversal, which actually was another big reversal of the day. That's why I say the 4-hour 10 a.m. candle is always the biggest candle of the day, and you can just trade the first half or the second half. I like to trade the first half because there are days where you've seen it just goes down versus if I wait for it to go back up. I'd rather be in the trade down because if it continues down, I'm already in it, and if it, reverses, then it reverses. But if you wait for the reversal, you might not get it. And you know me, I study the charts enough to find a setup every day. So if you trade the first half, you'll get a setup every day. And then another SMT, again, ES took out the high, NQ did not. It just happens like it didn't quite take it out. Just every reversal is SMT. and we were in a gap. Just look out where you are when you get on the chart at 9:30, 10 a.m. and you'll be like, oh, we're already in something. Or it's nice. That's why I usually get on 9:45, 10, because I like it when 9:30 already does the work for me, and then 10 o'clock I'm just clearly continuing. Or there are times where 9:30 is trading really shitty, as we've seen. Then 10 a.m. will do the work. So it just saves my ass from getting faked out. I've gotten faked out at 9:30 a lot. So it's like either, yeah, you can get on the top of a trade at 9:30, but half the time 10 o'clock still moves more anyway. So there's no point of rushing anything. Now I try to get on like 9:45 to catch. If 9:30 is acting right, I want to catch a little more, but here we are again on the day before. Beautiful SMT. Did not take out these highs like ES did. Boom. There's your reversal at noon. Beautiful. Beautiful, beautiful, beautiful. That's it. Every day. Every day it's something. Some kind of fair value gap, some kind of SMT, some kind of something. And this is why I leave my fair value gaps on, so like when they get inverse or whatever. Obviously, this is the move, so you have to go to a lower time frame when you see it pushing like this. And you'll know that. This is the hour. You have 60 minutes to get into this trade before it gets all the way down there. I think you can do that. And honestly, as soon as it gets down to probably this gap, or as soon as honestly you close below this white candle, get in there. So, and that's it, y'all. Let's really just keep it simple. Zoom out a little bit. It's my problem too. I zoom in so much. It's bad. Like, I'm just like this, not knowing what's going on. Not even, I'm like this in the morning. Like, girl, zoom out. Zoom out to the day before, like I said. Mark out your liquidity points. That's what the sessions indicators for me. Or obviously you can clearly see them. Or if you do enter a trade and then you go on the 5-minute time frame, I know it's not going to put us where we were, which sucks. You know, like, yeah, like yesterday, I think this was yesterday, like the day, yeah. You don't have to take it to London. You can just, if you're on a lower time frame, you can just take it to any swing low you feel comfortable with. You know what I'm saying? You don't have to do it on a higher time frame per se. But usually the higher time frames, it's going to that liquidity point, or you'll just, again, you'll see the SMT. You know, and it's so nice and relaxing. So I'm going back to my funded account this week. I'm taking a break from the live account still. I think my emotions are back in check. I'm confident in myself. Sitting in the higher time frame. Honestly, trading the 15-minute chart low key. Market is open now. If anyone wants to get in this Asian session, it's not my session, but we are live in the market if you want it. Never thought I'd be looking forward to Mondays. Right, I am literally looking forward to Mondays all the time. And like I have a show to watch now on Sundays. The Industry, which is about trading, so it's actually nice. But yeah, I think that's really it. 8:30 market open for like at 10 a.m. If you think it sells, you want to be above it. If you think it's buys, you want to be below it. But just keep it simple. Obviously, do that, and then your emotions are just the last part. That's the hurdle I'm going through now. Because the only thing about trading that I don't like versus dropshipping, like every new accomplishment has a new emotional thing to overcome. So you get funded, and now you have to overcome being scared to lose your funded account. And then like you make 10K, you make like $500 days, and then when you go to when you make $500 days and you go to $1,000 days, you have to get emotionally ready to risk more to make the $1,000. Like every step up has like emotional threshold that fucks with me, because I'm an emotional person. So it's like, I got funded, now do your thing. And I got funded in 9 months. I haven't got a payout yet. But when I get payouts and things, y'all will know. I'm definitely going to show y'all, so I'm very transparent. But because I want to show like, oh, you take 9 months to learn the skill, and then boom, in a month or two, you can make this much. You know, so I'll let y'all know, and then I'll open the Discord at that point. And I'll live trade again in the Discord. Maybe sometimes on YouTube and TikTok again, like maybe like every Friday or every Wednesday or something. But yeah, just keep it simple. And if you're extra scary sometimes, I added the 15 EMA for me. So say I'm scared to get in this trade because it's trading a little choppily like this. Once we close below it, which actually lines up with the close of this fair value gap, then I would get in sales. Like that would just help me. I don't use it all the time. It's on my chart. I barely look at it, but there are days where like I'm scared to get in a trade, and then the EMA is like, you're good. So, but I don't really use it most of the time. It's just on there for days like that. And that's it, y'all. You know what I'm saying? Liquidity fair value gaps. That's all you need. Wait for something to go up or down off a gap, and then take it to a liquidity point, which is a swing low and a swing high, and get rich, make your money. Don't watch your P&L. Don't just take good trades. Focus on taking good trades, and you'll scale up later. After my goal is like after every 10 trades, scale up, something like that. After every 10 wins, scale up. Boom. 1 micro, 10 wins, 2 micros, 10 wins, 3 micros, boom, do that. And then you'll see your account grow. Obviously, you can watch your P&L after the trade, but like don't watch it in real time because it will scare you. Like this move here would have scared you, but we still went to London low. You'd be like, oh, I'm up 400, oh, 250, boom, 5. You know what I'm saying? But you would have sold because you want to lock in your 250. Don't watch your P&L. That helped me get funded a little faster as well. I used to watch my P&L bad. Options trade, like, girl, special kind of hell. But yeah, that's it. Maybe we'll go back to backtesting tomorrow. But yeah, that's really it. Obviously, I'll go over what my trade is tomorrow. Maybe I'll go over NinjaTrader and brokers tomorrow. We'll see. Where should I start now? Are you like a complete beginner? Start right here. The holy grail to me. All right, internet. ICT 2022 mentorship. That's where everyone should start. It's how many videos? 41 videos. That's where you should start. And if you can't start there and it's too complicated, start with Lewis Kelly, I'm pretty sure is who I started with. He trades a little different, but he trades SMC. He goes
market structure is
all right. Not trying to get any violations on YouTube. He talks about market structure and price action a lot. Yeah, like see all these ones I watch. I watch these market structure videos so much. He trades more so order blocks, which a lot of SMT traders do. ICT is, you switch order blocks, but his entry models are a little different, but he still shows you market structure and stuff. Who is that? Who is who? ICT or Lewis Kelly? Who's which one? ICT is ICT, Inner Circle Trader, and then Lewis Kelly is Lewis Kelly. He used to do Prosperity Academy, but he doesn't anymore. And then just regular price action videos. I'm trying to find. I feel like I watched a video on price action that was so fucking good, and I could not find it. And it was like he talked about like fibs and just other stuff too that like was just really helpful. So like not even like really using it, but in the sense of like, okay, we ran up, now we're playing a retracement. I could play the retracement, like just knowing like things like that. There's me, but I don't know where it was. I don't know where it is. This is the model that got me funded from Key Flow Trades, trading the 4-hour chart. I kind of refined it a little bit, but same shit. I get on at 10 o'clock. But yeah, YouTube is free, obviously. And then join a bunch of lives. Like, you're already in my live. There's a bunch of people's lives, and they're really good. My dad FaceTimed me. I have to call him back later. I've been watching this Forex trading video, but I'd like to trade crypto. Are they relatable? Yes. If you can trade, you learn a trading strategy, and it works on all of them. So if you learn trend lines, you learn ICT, whatever, you trade it with crypto. I've traded Forex options and futures with the same strategy. As long as you learn how to trade, you can trade on all the things. So there's nothing wrong with that. I've been watching YouTube video about price action, but I still didn't understand. Then maybe start with candlesticks. For me, trading was like, what the fuck am I looking at? Until I learned this one thing. The body of the candle is the open and the close. The wick is the highest point it's ever been. Once you learn that, then that makes sense, I guess. That's what made sense to me. So, like on a down candle, we opened up here. The highest point we went was up here. The lowest point we went was down here, and then we closed up here. And this is a 1 hour chart, so that's 1 hour of time. It did that. And then here, we opened down here. We came up here at the highest point, down here the lowest point, and we closed up here. That, once you know what the candles are doing, I think everything else is easy after that. In my opinion, trading just came a little more naturally to me. But because in the first, when you first look at a chart, like, what am I looking at? But now that you know, like, open, you know, high and low and close, now you know, like, okay, we moved up, we moved down, the highest point. You know what I'm saying? So that's what helped me. And after that, I don't know, dude. You have to find just what works for you, and it might take you a while, and that's okay. It could take you a year to find your strategy. You know, it could take you a month. Like me, I don't know. I was like, I was drop shipping with my job. Finally scaled drop shipping like 50K months. Didn't like it. Quit my job though. I said if I scale my drop shipping store, I'm quit my job. Quit my job. Start paying off credit cards, and I was like, I'm gonna trade again. I liked trading in 2020. Why not pick it back up? I got on YouTube, and then TJR's bootcamp came up, and I watched it. And I was like, that makes a fucking fuck ton of sense. And then I watched ICT. So maybe watch TJR's bootcamp first, and then ICT made sense because I watched TJR's bootcamp because I knew most of the terms already. And then after that, I got on the chart, and I was just cooking with grease ever since. So, yeah, it worked. Because I could have watched TJR and ICT and not understood it and been, you know, further along, you know, my journey, but it just did make sense to me. So maybe look up trend lines, EMAs. Those are my 2 favorite retail strategies. And then if those don't make sense, then you'll come back to ICT. Or, you know, other people. Watch a bunch of YouTube videos. There's a lot of people now, like me, we always say now, you don't even need all that extra shit. Just a fair value gap and liquidity. That's all you need, in my opinion. But if you want to learn like all the other ICT terms, like market maker models and I still to this fucking day don't know what a SIBI is. Sell side imbalance, something imbalance. Like I don't even know what that is. I don't trade it. I don't care. I'm funded without it. You know what I'm saying? Like you don't have to learn every ICT term. I think that's where people get confused. They try to learn every ICT term. But you don't. You can try, but if you don't, like, don't worry about it. Don't worry about it. But I'm gonna get off these charts. I might go live after my trade. I'm not really trading live anymore. I'm saving that for the Discord and or just like emotionally. I've been letting the chat get to me. So I might go live after my trade or once I'm in my trade tomorrow morning. And then obviously every night like this, 8 o'clock, we back test. So I hope that was helpful for y'all. Let me know anything else y'all want to see on these things. I'll be doing them for the rest of the year, every day at least. And then next year, I don't know if I'm going to do them or I'll do them like 3 times a week or something. But we'll see.